It's time to start investing in Surrey again. Well, almost. Most people think real estate investing is out of reach, specifically in my market of the lower mainland of British Columbia, where home prices are sky high, and where the lack of real cash flow has made smart real estate investing look more like stupid speculation. But that might all be changing. And in some areas, in particular property types, there could be massive opportunity to buy into the market in the not too distant future. In fact, there are two major factors that are tilting the tables of investing back towards that sweet spot that so many residential investors have been looking for. It's not quite there yet, but there's also the possibility that if you wait too long, you're going to miss out on timing the market just right. And then when word gets out, everyone else will jump into the investor pool at the same time, causing prices and competition to both increase. Now, my team has been working with investors for years, and we often see a couple of different mistakes. One, either they wait too long to get into the market and then prices rise, costing them a ton of money. Or two, they wait even longer and then end up with extreme FOMO as they hear about other success stories of investing, and then they buy into the market at the peak, costing them even more money. But soon, pretty soon, the people who time the market just right will end up being those success stories that everyone else hears about in the future. And these same buyers that I'm talking about are the people that will jump into the market when everyone else thinks it's the worst possible time. And in today's video, I'm going to share with you why now is a great time to buy compared to when your friends did a few years ago. Then I'll break down the numbers so you can see how much better it is to buy today than it was before. And if the time is right for you to make a real estate investment, or if you're looking to purchase a home in Greater Vancouver, you can book a call with me right now using the first link in the description below at a time that works best for you. Now let's talk about those two factors that are about to put us back into that investor sweet spot. And the first is interest rates, specifically interest rates heading in a lower direction. At this point in the market, both fixed and variable rates are headed lower. In fact, as soon as about 18 months ago or so, 5-year fixed rates topped nearly 6.5%. And although historically that's not all that high, 2023 was one of the highest rate cycles when compared to the previous 20 years. Thankfully, now we are seeing those same 5-year products starting to hit as low as 3.99%. And there is a good argument that they will continue to head even lower as the economy worsens and international political unrest applies even more downward pressure. This all then comes together to cause the second factor that prices, well, they are decreasing too. If you've been following the market over the last 5 years, you will know that prices almost everywhere peaked in early 2022. Then by the end of that year, they took a massive nosedive and have kind of chilled out since then. But investor style products have been hit harder in neighborhoods like Wally City Centre in my hometown of Surrey, BC. Prices in other areas like downtown Vancouver have held out pretty well, while the investor-heavy suburbs that drew massive speculation in the pandemic are still on the slide. Let me give you an example. This unit in Wally was listed and sold in June of 2023. Around that time, it wasn't crazy to think that you would see an interest rate on your mortgage of about 6.25%. And that property sold for $496,000. After factoring in the $317 per month strata fee, $800 per year for insurance, and another $2,000 in property taxes, the payment and total cost for this property would have been as much as $2,993 per month. And even at the height of rents, it may only have fetched about $2,100 per month in rent for a proper one-bedroom unit, leaving a potential investor with a shortfall of up to $893 per month. And with less than $400 per month going towards principal, well, that was not an investment at all, and rather it was a rental subsidy. Numbers like this are what caused investors to leave the marketplace altogether. And properties like the one mentioned that were now harder to sell ended up being purchased by new owner-occupiers, which I actually think is a good thing for the overall marketplace. We can't, after all, have only investor-owned properties. But now things have changed, and if they keep going in the right direction, it might be time for you to invest soon. Because as of shooting this video, the last sale in that exact same building for the same size unit dropped to as low as $430,000. And this unit is available right now for $425,000. Now I'm going to leave all the other numbers exactly the same as they were, except for our two factors. This time I'm going to change your purchase price to the asking of $425,000, assuming that you cannot negotiate it down. And after applying the new 4% interest rates that we're seeing today, that monthly nut to crack has dropped as low as $2,173 per month. And yes, this number includes strata fee, property taxes, and insurance. Now, rents, to be fair, have also come down slightly to the tune of 3 to 4% over last year, and maybe as much as 10% from the peak. So let's say now you need to put in a new tenant, and now you can only rent this unit out for about $1,950 per month, which I'm still projecting as slightly low. While this changes your previously negative cash flow position from almost $900 per month to now as little as $223. Now that is a lot easier to swallow, specifically knowing that the payment going towards principal per month is nearly $500. Now, trust me, I know what you're gonna say.
Yeah, that's not an investment. That's still cash flowing negative every month.
And yes, granted, that is true. But the realities of the market here in the lower mainland of British Columbia are that many investors are quite okay with cash flowing in this manner. And they even treat that $200 negative per month as something similar to an RRSP contribution. But the point of this video is that it's almost time to start investing in real estate again. Prices are continuing to drop, and as of now, so are interest rates. As a result of these trends continuing, there will be cash flow properties at 20% down within the coming months. But now we have to discuss the pitfalls so you can be fully informed and also so you don't make a stupid decision. First, personally, I think any rental that you buy, you should always put down at least 30%. 20% for me is not perfectly ideal. You just don't have enough skin in the game, and if the market changes, you could be put in a tough spot. I personally would encourage a larger down payment if possible. Second, this is only available in very specific areas. The neighborhood of Whalley I used in this example has been an investor and speculator heavy area that has been hit hard. Other areas, as I mentioned earlier, have not seen the same price drops, which is good if you already own in those areas, but not good if you're looking to purchase now somewhere else in a nicer neighborhood as an investor. Because let's face it, in the lower mainland, there is a lot nicer places that you could be buying real estate than Whalley. Third, it's not only area specific, but it's also building specific. In crunching these numbers, I used a proper one-bedroom apartment and not a junior one bed that will attract lesser tenants. You also must be careful with insurance. I used an annual number for insurance of $800. I use this number because that's what I pay for my rental condo, and it's a common number that I see lots of my condo clients paying for their strata properties. But many buildings, and particularly in concrete high-rises, they have much higher insurance premiums as a result of previous water loss claims in the building. I've heard that some owners are even paying as much as $3,000 to $4,000 per year for their insurance. That might be okay if you're a homeowner and you really enjoy where you live, but well, as an investor, this number alone could make or break you. But don't worry because, well, you don't have to go it alone. If you need help, remember that you can book a call and explore hiring my team to help, because there are so many other mistakes that you could make while investing in real estate. And if you want to avoid the most common mistakes that I see real estate investors making every single day, check out this video right now. Just watching this video could save you from making a terrible decision as you explore becoming a real estate investor. And it's all free. So why wouldn't you watch it right now?